Hello and welcome students. In the last video lecture, I had explained you question number 12 and 14 of chapter number 4, that is journal. Now in this video lecture, I am going to explain you question number 13, that is very important sum as it includes all the different varieties of journal entries, that is the summation of all the different types of transactions in one particular sum. So without wasting much time, let us start with the question. That is on page number 105 of your textbook. Question number 30, transactions of inclusive of all. Inclusive of all means all the different types of transactions related to assets, goods, revenue, expenses, any kind of transactions which we have studied in the previous sums. Over here, all the types of transactions will be coming in one particular sum. Okay. So let us start with it. As you are knowing the formation of journal entries already over here I have written, that is journal of Shri Maulik Shah. As you can see in your question, the name of the person or the owner of the business that is given to you, that is Maulik Shah. So we have to give the heading, that is journal of Shri Maulik Shah. A specimen of journal entry also you are knowing, that is date, particulars, LF number, debit and credit. Same format you have to apply over in all these sums. Now the first journal entry, that is on 2014 year, July month and first date. Okay, let us read the transaction first of all. July 1st, 2014, brought rupees 50,000 cash, debtors 20,000, stock of goods 10,000 and creditors of rupees 5,000 and commenced business. Now students, till now whatever the journal entries we have done in that, cash, debtors, stock of goods came was bringing the owner as capital, but over here the owner is bringing creditors also as capital. It means in future that much amount of money we have to pay to the creditors. So always creditors will be having a credit balance, debtors will be having a debit balance. Okay, so here you can see the journal entry that I have written, cash account debit. He has brought cash rupees 50,000. And debtors account debit, that is 20,000. He has brought debtors worth rupees 20,000. And stock of goods account debit, that is 10,000. It means these three things that he has brought in the business in the form of capital. Now to creditors account credit, it means 5,000 amount of creditors that we have to pay from the firm by the owner of the business. Okay, so creditors account credit, that is rupees 5,000. Now how this value of capital came, that is to capital account credit, and I have written 75,000. See, total of debit balance, that is 50 plus 20, 70 plus 10, that will come 80,000. From 80,000 you will subtract creditors, that is 5,000. So remaining that will be the balance of capital, that is 75,000. Already I explained you that the total of debit and credit will always be equal. So whatever amount you are debiting, same amount you have to do credit also. Okay, so here you can see the cash account is debit because that much amount of cash the owner is bringing. So debit what comes in as per the rule of real account. Then afterwards debtors account debit, also debtors we have to receive the money from that particular debtor. So debit what comes in. So in future we will receive this much amount from the debtors, that is 20,000. And stock of goods account debit, that is also 10,000. That is also as per the rule of real account, that is goods or assets comes in. Over here because of because of stock of goods, that much amount of goods comes in the business in the form of capital, that is introduced by the owner while commencing the business. Okay, so these three things he is bringing. And also creditors, it means this much amount we have to pay from the business. So creditors account that has been credited by rupees 5,000, and the balance of difference of debit minus credit balance, the remaining balance, that would be of capital. So capital account has been credited by rupees 75,000, that is 80,000 minus 5,000 capital account balance, that would come 75,000. After every journal entry, students don't forget to write the narration. Now I am not discussing the narration because now you are used to how to write the narration in your own words. Next one, that is second entry, deposited cash rupees 20,000 with Vijaya Bank and opened account. Now Vijaya Bank is the name of a bank, and in that bank the account has been opened by depositing rupees 20,000. So bank is the receiver, Vijaya Bank is the receiver, and that much amount of cash goes out from the business of the firm. Okay, so the second journal entry you can see I have written Vijaya Bank account debit because bank is the receiver. So as per the rule of personal account debit the receiver. Vijaya Bank account debit, that is 20,000, to cash account credit, that is 20,000, because out from the firm. So credit what goes out as per the rule of real account. Next one, that is third date. Goods of rupees 20,000 purchased from Sumul at 10% credit discount and 10% cash discount. Paid half amount by check. Now we have purchased the goods from Sumul. The goods worth rupees 20,000. On that there is both 10% credit discount and 10% cash discount. First of all, we have to count the trade discount. On 20,000, 10% it would come to 2,000. So remaining balance that would be 18,000. Okay. So here you can see the journal entry that I have written, purchase account debit, that is 18,000, because that much amount of goods comes in. So purchase account will be debited by rupees 18,000. Out of that, half amount that he has paid in check. Now whatever amount that he has paid in check, on that we have to count the cash discount at 10%. Students already have discussed in the point of cash discount that whenever the customer is paying the amount in cash, then and then only we have to count the cash discount. On credit transaction, never cash discount will be counted. Okay, so here you can see half amount to Sumul's account, that is credit transaction. 9,000, it means that much amount will be still to be received from Sumul. So it is a credit transaction. Half is credit and half is cash transaction. So 9,000 is as it is credited to Sumul's account, and to bank account credit I have written over here 8,100. Now how 8,100 came? Now half of 18,000, that would be 9,000. Okay, of 9,000, 10% cash discount, it would come 900. Okay, so 9,000 minus 900, the amount that would come, that is 8,100. So that much amount of check you will have to give to Sumul, that is 8,100. Okay, so to bank account credit, that is 8,100, to discount account credit, that is 900. Because due to purchase of goods, you have to pay less amount. So this discount is an income for you, okay, for the business. Okay, so discount account has been credited as per the rule of nominal account, credit all incomes and gains. So discount account has been credited by rupees 900. Again, referring the entry, purchase account debit, you have purchased the goods after subtracting credit discount, that is 18,000. From that, half of the amount you have not paid to Sumul, so that is a credit transaction. Half of 18,000, that is 9,000, and half amount you have paid in check. So on that half amount you will count the cash discount at 10%. So 9,000, 10% would come 900. So remaining balance that you are paying in check. So bank account credit, because that much amount of check you are paying. So your bank balance will be reduced by rupees 8,100. And to discount account credit, that is 900. It means because of less payment in the form of check, you are receiving a cash discount of rupees 900. So that is an income or gain for the firm. Okay. Now after completion of the third entry, let us move on the fourth transaction. A furniture of rupees 15,000 purchased on credit from Punit Furniture Mart. A carriage of rupees 100 paid in cash. Now over here furniture is purchased on credit. It is clearly mentioned that we have purchased the furniture on credit from Punit Furniture Mart, and 100 rupees whatever the transportation carriage expenses that we have paid in cash. Okay, so combined entry we are writing for both, that is furniture account debit, because assets comes in, so debit what comes in. So furniture account debit, that is total I have written 15,000, that is the actual value of the furniture, plus 100 rupees, that is the value of carriage, that is the carriage expense. So total expense for furniture, that is 15,100. To Punit Furniture Mart account credit, that is 15,000, and to cash account credit, that is 100, because it is a credit transaction. So over here the name of the shop from where we have purchased the furniture is to be credited, because Punit Furniture Mart is the giver of the furniture to the business. So credit the giver. And to cash account credit, there 100 rupees, that is carriage expense that we have paid in cash. So cash goes out as per the rule of real account. Okay, so furniture is coming including the cost of the carriage expense. In the last video lecture, one extra example or transaction was related to this. In that I have given separate entry for carriage. Students, you can give separate entry also for carriage, and you can give the combined entry also in this way. Both are the correct way. Okay. Next one, that is fifth transaction. Defective goods of rupees 3,000 returned to Sumul. Now we have returned the goods to Sumul. Okay, so goods returned to Sumul, that is Sumul's account debit, that is 3,000, because Sumul is the receiver of the goods. So debit the receiver. In the previous transaction we had have purchased the goods from Sumul. Third date, we have purchased the goods from Sumul. Now out of that goods, whatever we have purchased of 18,000, we are returning the goods worth rupees 3,000 to Sumul. So Sumul's account debit, that is 3,000. Previously that was purchased. Now we are returning the goods. So purchase return account that will be credited, because due to purchase return, that much amount of goods we are returning back. So goods goes out of the firm. So credit what goes out, that is rupees 3,000. Then afterwards, sixth transaction, goods of rupees 12,000 sold to Rajeshri at 10% trade discount and 10% cash discount. Paid half amount by check. Now 12,000 worth of goods are sold to Rajeshri and 10% trade discount and 10% cash discount. Half amount that is paid by, half amount paid sold, so we have received the amount, half amount by check. They have paid the half amount by check. Because of sales, we will receive the money, okay, but we have received the check only for half amount. So on whatever the half amount we have received, we have to count the cash discount. First of all, how much amount of goods that we had sold to Rajeshri, that is goods of rupees 12,000. So on 12,000, 10% trade discount, it would come to 1,200. Okay, so 12,000 minus 1,200, remaining balance that would be 10,800. So here you can see I have written two sales account credit, that is 10,800. These many worth of goods goes out from the firm. So sales account has been credited by rupees 10,800. Now over here, half amount that we have not received from Rajeshri. Okay, so Rajeshri's account debit, that is half of 10,800, that will come to 5,400, and half amount that we have received. Now half of 10,800, that will come to 5,400. On 5,400, we have to count 10% cash discount. So 5,400 minus 540, remaining balance that will be 4,860. That much amount of check you will receive from Rajeshri. So bank account has been debited by rupees 4,860, because that much amount of check is received from Rajeshri. So our bank balance will be increased. So bank is the receipt. Okay, and discount account debit, because here we are giving the discount to Rajeshri. We are getting less amount compared to 5,400. So 540 that we are giving discount to Rajeshri. So here discount is an expense for the business or the owner of the business. Whenever you are selling the goods on discount, that discount becomes an expense for you. But whenever you are purchasing the goods on discount, then discount becomes an income for you. So discount will be credited in case of purchase and discount will be debited in case of sales. Okay, so this thing you have to remember, that discount is considered as an expense over here or it is an income over here. Okay. After completing 6th day, let's move on to 8th day. Goods of rupees 15,000 sold to Mahindra on cash at 10% trade discount and 10% cash discount. Now over here the entire transaction is cash transaction. It is not told that half amount is only received. It is a cash transaction. Okay. How much worth of goods we have sold? That is 15,000. On 15,000, 10% trade discount, that would come to 1,500. So remaining balance that would be 13,500. Okay. So here you can see I have written the transaction, that is cash account debit 12,150. Now first of all, we have sold the goods at rupees 50 of worth rupees 15,000 at 10% trade discount. So 15,000 minus 1,500, that will come to 13,500. Now on that 13,500, you will count 10% cash discount, because entire transaction is a cash transaction. So again the value that will come, that is 1,350, that is the amount of discount. Now 13,500 minus 1,350, remaining amount, that is 12,150. Okay, so that much amount of cash you are receiving. So you are receiving less cash. So you are giving a discount while selling the goods. So your discount is an expense or loss for the business. So discount account has been debited over here. Debit all expenses and losses. Okay. So cash account debit, that is that much amount of cash you have received. So debit what comes in. Cash account debit, that is 12,150. Discount account debit, that is 1,350. To sales account credit, that is 13,500. Okay, this is a complete cash transaction. Previously, whatever journal entries that we have written, in that both were the transactions related to half transaction that was a credit transaction, half that was a cash transaction. Here the full transaction is a cash transaction. So on on 10th date. Withdrawn goods of rupees 300 and cash rupees 200 for personal use. Now these two things, goods and cash, that we have withdrawn for personal use. Whenever the word personal use comes, drawings account will be debited. Okay. So here you can see the journal entry that I have written. Drawings account debit, that is total of 300 plus 200, 500. To purchase account, that is goods withdrawn for personal use, then always purchase account will be credited, because that much amount of goods will be reduced from the firm. We have not sold the goods, but they are withdrawn for personal use by the owner. So to purchase account credit, that is 300, and to cash account credit, that is 200. That much amount of cash goes out from the firm for the personal use of the owner of the business. Okay. So drawings account debit 500, to purchase account credit 300, to cash account credit, that is 200. Then afterwards, 11th date. Purchase plastic bags of rupees 200 for goods packing by cash. Purchase plastic bags for goods packing. For goods packing, the plastic bags have been purchased. Whatever the goods are manufactured, we have to pack it, and for that plastic bags are purchased worth rupees 200. And whatever the expense that we have paid in cash. Okay. So here you have written the entry, that is packing expense account debit, that is 200, because it is one kind of expense for the business, and as per the rule of nominal account, debit all expenses and losses. So packing expense account debit 200, to cash account credit, that is 200. It means that much amount of cash we have paid for purchasing of the plastic bags. So cash goes out. So as per the rule of real account, credit what goes out. Okay. Next one, that is 12th date. Rupees 2000 paid by check for salary and wages. Now over here, salary and wages are also an expense. So debit all expenses and losses as per the rule of nominal account. So salary and wages account debit, that is 2000. To we have paid by check. So our bank balance will be reduced. So bank is the giver. So as per the rule of personal account, credit the giver. So to bank account credit, that is 2000. Okay. Next one, that is 13th date. Bettels took place 300, which was due from Rajashri, and received remaining amount in cash. Now the transaction dated to 13th one, that is similar connected with the 6th transaction. Now in 6th transaction, total amount of dues from Rajashri, that is 5400, because half amount that she had paid in check. So only half amount is due from Rajashri, that is 5400. Of that, 300 rupees are considered as bed debts, and the remaining amount that is received from Rajashri, that is in form of cash. Okay. So whatever amount that is received from Rajashri, that amount will be debited. It means cash account will be debited by rupees 5100, because out of 5400 due from Rajashri, 300 rupees are considered as bed debts. So remaining amount 5400 minus 300, it would be 5100. So cash account debit, that is 5100. Bed debts is in loss for the firm. So debit all expenses and losses as per the rule of nominal account. So bed debts account debit, that is 300, and to Rajashri's account credit, that is 5400, because she is the giver. That much amount is due from Rajashri. Okay. Next one, that is 14th date. Due to additional requirement of fund, 12% loan of 25,000 obtained from Axis Bank. Additional requirement of fund, and because of that, the loan was borrowed from Axis Bank. Okay. So here you can see Axis Bank is the giver, and our bank balance will be increased. So our bank account is receiver. So bank account debit, that is loan we have purchased of, we have got of 25,000, and loan is given by Axis Bank. So Axis Bank loan account, that would be credited, because that is our liability to pay in future. Always liability will be credited. So to 12% loan account credit, that is 25,000. So Axis Bank is the giver of the loan, and our bank account will be increased by rupees 25,000 because of that loan amount. So bank account will be debited by rupees 25,000 to 12% loan of Axis Bank account credit, that is 25,000. Okay, because Axis Bank is the giver, so credit the giver, and our bank balance will be increased, so bank account is debited. Next one, that is 15th date. Goods of 2000 destroyed by fire, for which insurance company has admitted claim of 1500. Realized rupees 200 from goods burned by fire. Now out of the goods destroyed total, that is 2000. Insurance company, I had already discussed that never the insurance company will give the full claim of total destruction. nearly 80-90% of the destruction they will pay will be available as a claim from the insurance company. So over here, out of 2000 goods destroyed by fire, insurance company is accepting claim of rupees 1500, and whatever the goods that has been destroyed, that has been sold at very low price, and from that selling, from that scrap selling, whatever the goods that have been burnt out, that have been sold out at very low price, and from that selling 200 rupees had been realized. Okay, so that is an income or cash has been received of rupees 200. Okay, so here you can see I have done the entry, that is loss by fire account debit. Because loss, how much it would come? 300, because we have received the claim of insurance company, that is 1500, cash that we have received by selling of those destroyed goods, that is rupees 200. So 1500 plus 200, that would come to 1700. Total goods destroyed, that is 2000. From 2000 we will subtract 1700, so loss that would come to 300, and loss will always be debited as per the rule of nominal account. So loss by fire account debit, that is 300, insurance company account debit, that is 1500, because that amount is received by the firm from the insurance company, and cash account debit, that is goods that destroyed, that were sold, and 200 rupees cash was received. So debit what comes in. To purchase account credit, that is 2000. Already I told that any kind of goods, whether they are destroyed by fire, given as donation or charity or advertisement purpose, then always purchase account will be credited. So actually the goods destroyed by fire, that is of rupees 2000. Now after completing 15th date, next moving on to 16th date. Both life insurance premium of Sun rupees 450 and fire insurance premium of rupees 550 paid by check. Now already discussed that if it is life insurance premium, then the word drawings would be applied over there. So here you can see I have written the entry, that is drawings account debit, that is 450, life insurance premium of Sun. Will not write life insurance premium, will write drawings account debit, that is 450, and fire insurance premium will write as it is. So insurance premium is one kind of expense for the firm. So debit all expenses and losses as per the rule of nominal account. So fire insurance premium account debit, that is 550. To bank account credit, that is rupees 1000. See, it is mentioned to you that is paid by check. So our bank balance will be reduced by rupees 1000. That is total of 450 plus 550. So bank balance will be reduced by rupees 1000. So our bank is giver. So credit the giver as per the rule of personal account. Okay. Now after completing 16th date, lack of space, there is limitation of space. So I have written over here in limited space, that is the 18th date transaction. Let us read the transaction. Nirma company gave 30 number of soap free of cost as a sample, which are sold for rupees 250. Now free samples that get received from Nirma company, the soap, that is 30 soaps that get received. So there will be no any entry because this is a non-economic transaction, that is a free samples. But that free samples we have sold and we have received the amount, that is 250. So we have to give the entry for only rupees 250. Okay. So cash is received, so cash account debit, that is 250, and we have sold that sample goods at rupees 250. So to sales account credit, that is 250. Whatever we are receiving as free samples, there will be no entry for it. But whenever that free samples we have sold and cash is received, then the entry would come for that sold goods. So cash account debit, that is 250. To sales account credit, that is 250. Next one, that is 20th date. Received rupees 100 from Rajeshri for bed debts return off. Now previously the bed debts from Rajeshri that we have done in the 13th day, that was of 300. Out of 300, 100 rupees are received from Rajeshri, which was previously considered as bed debts. So now that amount is received, so it is considered as bed debts return or bed debts recovered. Bed debts is a loss, so always it will be debited, and bed debts return is an income or gain for the firm, so it will always be credited. So the journal entry that would come, cash account debit, that is 100, because that amount of cash is received, so debit what comes in, and to bed debts return account credit, that is rupees 100. So bed debts return is an income for the firm or gain for the firm. Okay. Next one, that is 25th date. Axis Bank has charged loan interest of 250. Loan interest is just charged, but still that interest has not been paid. Okay. So loan interest would be an expense for the firm because we had obtained the loan from Axis Bank. So it is our liability to pay the amount of interest to Axis Bank. So loan interest is an expense and debit all expenses and losses. Okay. So loan interest account debit, that is 250. To loan account credit, that is 250. Here you can write to loan of Axis Bank account credit, that is 250. Because of lack of space, I have written just to loan account credit, that is 250. Okay. Next, that is 28th date. Paid rupees 2000 for painting work of personal building and 1000 for painting work of shop. Now whatever the painting work that is for personal building, then it would be considered as drawings, and for shop purpose whatever painting work has been done, that would be considered as shop expenses. Okay, so here you can see I have written whatever the painting work for personal building, I have written under the heading of drawings. So drawings account debit, that is 2000, shop expense account debit, that is 1000, and both the amount of expense that is paid in cash. So cash goes out. So credit what goes out as per the rule of real account. So put cash account credit by rupees 3000. That is total of 2000 plus 1000. Okay. Next, last entry, that is 29th day. Paid internet connection deposit rupees 2000 by check. Now internet connection we had taken in the shop, and that internet connection deposit that we have paid by check, that is rupees 2000. So it is one kind of expense for the firm. So here you can see the entry that I have written, internet deposit account debit, that is an expense. So debit all expenses and losses as per the rule of nominal account. So internet connection deposit account debit, that is 2000. To bank account credit, that is 2000, because that amount we have paid by check. So our bank balance will be reduced by rupees 2000. So bank is the giver. So credit the giver as per the rule of personal account. Okay. So that's the end of the sum. So this sum is very important. At the end of the sum, we have to do the total of both the sides. Again, I am repeating that the total of debit and credit would always come equal, because each and every journal entry, whatever amount that we have debited, same amount that we have credited. Okay. So total both the sides is coming 2,02,100. Over here also 2,02,100. So that's the end of the sum, students. Today we have completed this sum. This is very important sum. Do revise it again and practice this sum in your notebook by referring the video lecture. In the next video lecture, I will be starting the explaining you the two sums related to GST. But before that, I will be explaining you the topic of GST. Till then, goodbye. Keep practicing. Stay blessed.